What's up, everybody? My name is Cameron, here to do a market recap on NASDAQ today. Today is February the 11th, 2026, and I just want to go over the trades that I took today and the reason why I took them. So, kind of coming into the market open, it was non-farm payrolls and unemployment rate at 8:30 Eastern time released, and the news was good news. So in pre-market here, we had this large bullwhip. Right now we're on the 5-minute chart. Let me take off kill zones so you guys can see the chart a little better. So we have a big push up, and this starts pre-market, a bullish market structure. Kind of coming into this session though, our higher time frame is still bearish, and we've been bearish since, as you can see, the 28th of January has started our bearish order flow. And since then, we've kind of been like chopping around in this kind of accumulation phase since about November. But yeah, we're still we are still in bearish order flow on the higher time frames here. Even though we had this big push up, I was really looking for price to close above this key level right here. If I can get it. There it is. So, yeah, this was just a key level. Sorry, I don't have this marked out. I usually have these marked out, but on all my other charts, on like back testing and my actual charts on Top Step. So key high. So what this would have been is, as you can see, we're kind of coming down in here. This is not a break of structure. So, sorry, this change in state of delivery. So we have right now what is bearish market flow. We're kind of coming down. We break this right here, and this is our break of structure to the upside. And we kind of have these sub lows right here that we like crush past as well. So it's kind of like a change in state of delivery has already happened to the upside, but I would love to see us close above this key high, especially since these highs right here were kind of in low resistance liquidity. So it's pretty easy, but in order for us to get past this high resistance liquidity right here and break to the upside, I would like us to see us push past this level instead. It'll give me more confidence that a true market structure shift has changed. So that's the reason why I had this as my change in state of delivery line for the 1 hour time frames. And as you can see, we're respecting this bearish liquidity pool. That's kind of like right in here. So we actually have two order blocks, 1, 2. So this is creating a bearish liquidity pool that price is respecting right there. All right, and let's go ahead and go back into pre-market, market open. So as you can see, we had, again, the good news pump up the price, and we're pushing past fair value gaps, all this other stuff, which is great. And then we go ahead and reverse into market open. So coming into market open, we're now on the 1-minute chart. Let's go ahead and stretch these candles out more so they look better. There we go. That's a good little view. So market open right here. We have a lot of room to the upside and a lot of room to the downside on the, let me just go ahead and reset the price scale, draw out some levels really quickly on kill zones. Just a couple of the key levels that we had. don't mind. Perfect. So as you can see, we have Asian highs, Asian lows, London highs, London lows. Sorry, not London lows. London lows had not been claimed yet. So let me go ahead and mark that right there because that was actually, spoiler alert, that was my target exit liquidity. So London lows right there, but we see London highs, Asian lows, previous session highs, and Asian highs. Previous session lows, Asian highs, Asian lows, London highs have all been taken. And this push with the employment data this morning had us claim previous day highs. So the only unmitigated at market open, the only unmitigated liquidity pool was London lows. And as we kind of take this turn into the downside, today I went ahead and wanted to go ahead and wait for the time to hit 9:45 to start trading. So just with this news, I didn't open range break out this, where you put like 20 points above, 20 points below, you wait for the market to rip higher, rip lower on these high impact news events. I didn't do that, and I wanted to wait for 9:45 for the opening range and this volatility from this liquidity injection from the news to kind of settle down. And at this point, this reversal that caught a lot of people had already really played out, and we were looking to just continue to really go to the downside. This kind of like put us into a good premium zone right here, this little shift. And I was still looking for shorts, knowing that we had not closed above this level. I was like, okay, market structure is still bearish in my mind, unless I see us close above this. Let's go into the 15-minute chart here and mark out a couple of confluences. So the two main confluences that I want to highlight here are these two 15-minute fair value gaps that I was looking at as well on our way to the downside. So we have this bearish fair value gap right, or not bearish fair value gap, I'm sorry. We had a bullish fair value gap right here, 15 minutes. All right. And we had another one right here. So if you haven't seen the video that I added earlier, I think it was earlier this week or last week, I made a big video rant about stop trading into high time frame PD arrays, which I'm not a fan of, especially higher time frame PD arrays. So we had short opportunity up here on this break of structure to the downside. We had short opportunity up here with another break of structure to the downside, but this break of structure was actually also within the fair value gap, and I wasn't sure if this was going to get respected or not, especially with yesterday's previous traumatic price action of that sliver of a fair value gap being the catalyst to reverse the entire position. With one this wide, I definitely wasn't going to put on any size on any positions until I saw a clear confirmation out of this fair value gap. And we just continue to push lower, continue to push lower. Didn't really have too many confluences here. We had some fair value gaps in here and here. But again, taking these shorts into this bullish higher time frame PD array, not a fan of. Also not a fan of just putting, shorts right here and just expecting a shift to the upside. Also, I will say I like to see a little bit more of a reaction and confirmation off of these levels if I'm going to do a reversal trade, like go in longs right here or even up here at this level. And I've just learned that from, it is a good strategy to mark out these higher time frame confluences, higher time frame PD arrays, and, you know, take reversals off of it. But it's probably better to kind of wait to get a little bit of a confirmation before you enter in on the market. And with these well, I wouldn't say manipulations. I guess they are manipulations. They're algorithmic manipulations because it's mostly computers that are trading these moves. So with these manipulations, I see a lot of times we either have two different situations that'll happen after these things. If it shoots up or it shoots down, it'll either continue the trend, it'll continue, or it will just eat up all this liquidity. We'll see a manipulation that will eat up all this liquidity, and it'll act as, even though you might think it's high resistance liquidity, it might act as like low resistance liquidity. In this case, it acted as like a low resistance liquidity. So I went ahead and really just waited for, we ate up this fair value gap. And I was like, okay, well, this fair value gap can still most likely get eaten. And we're still looking to, price was still moving aggressively to the downside. Me thinking there's institutions still on this manipulation, riding this manipulation phase. So I really waited for this closure on the 1 minute chart below this fair value gap. Let me take off kill zones again. Sorry for leaving that up. My apologies. I know it's probably way harder to see the charts with that on. My apologies there. So this is the point in which I got into the market, was right here, this short at this candle closure. And I went ahead and put my high above this high right here. And again, London lows was the only unmitigated liquidity pool at this point, this data low. So that was my trade. And as you can see, 2.3, really great. I charted it out already here, so I knew this is something that I wanted to take, seeing that there was enough room for me to get a good return on a good R trade here. And what really gave me the confidence after we closed below this fair value gap and inverted it was seeing that really from right here to right there, all of this is just, low volume, low resistance liquidity. This is from, I believe, London session. So yeah, low resistance liquidity made total sense for us to just really get in there and have a position, have the confidence that it's going to eat up all this liquidity right here before we get to this level. And that's what ended up happening. Just took the trade right after it. Again, my entry was right here. I kind of drew a line, and this was my continuation confirmation. That was my continuation confirmation that we were going to still keep going to the downside out of this after it closed. So we close through the fair value gap and close below a low. But that was really about it. Traded 2 contracts, ended up netting, I think it was $411 from this trade. This position right here isn't the exact position that I did. It was like, it might have been something different. I don't know what my exact levels were, to be honest. I've already journaled it, but that's kind of what it looked like. But it ended up 2 contracts there getting me about $411. And yeah, I thought it was a really great trade. Don't really have too much else to say other than that. really, again, guys, you have to take the time to really look at the 1 hour charts or the daily charts to kind of understand what the higher time frame is doing. We've been in bearish market structure since the 28th, which that's 2 weeks now that we've been in bearish market flow. And even if you think we're still in an uptrend, let's say you looked at the daily time frame, you're like, Cam, this looks like an uptrend. You're totally right. But this is kind of where understanding market structure comes into play. Even in an uptrend, we have these legs where we have these downtrend legs. So we move up and we move down. We move up, make a higher high, higher low, higher high, higher low, higher high, higher low. So right now, even if we were in the process of moving to the upside, right now we're making, after it's a higher high, either a lower low, which we've made that now, or a lower high. And that's just where we're at right now, especially on the 1 hour. We're just making that level low, and we're kind of coming up. We're rejecting off this key high, so we're probably going to keep going lower unless, like, in the next day, tomorrow or Friday, say Friday, we get good news, which we have inflation year over year, month over month, core inflation year over year, month over month. That might be the catalyst that like shoots us into bullish market structure and confirms us past this key high. So also, this would be a great time to make sure that you're keeping track of any positions that you're having either on call sheet or poly market. Keep an eye on those, because having good employment data is the first leg. It's kind of one of the key ingredients that the Fed needs for inflation to get cut again. And most likely, if we get positive inflation news on Friday, we'll start pricing rate cuts in to the market and start bullish order flow next week in preparation for those rate cuts. So Fed cuts rates, markets go higher. But that's really about it, guys. Looking forward to trading tomorrow and Friday. Hope you guys had a great day. Hope you guys are trading intelligently. You know, again, the trend is your friend. Don't trade against the trend. Mark out your key levels so you know what the market is doing. And we will catch you in the next one. Go look in the markets. Have a great day. Oh yeah, if this video added any value or you got anything from it, please like, comment, subscribe, share with your friends, and check out the links in the description for my other social media channels. We'll catch you in the next one.